BAAP versus value investing. Markets are in full swing, and India's prospects for becoming a developed economy by 2047 is coming nearer. The valuation of major visible brands are trailing in upper double digits. The wolf in sheep's clothing is back with a new scheme. BAAP investing. BAAP leaps to buy at any price. When things don't go according to plan in the next quarter, BAAP leads to SAP, that is SAAP, sell at any price. Hence, now a calm activity of reading, understanding, forming a long-term opinion is now being turned into a hectic day job. The continuous bombardment of news from all over the internet and the company's conference calls and quarterly reports, the direction of wave is constantly changing. See, a business is an entity that provides goods and services in exchange of monetary benefits. A stable, profitable business has ups as well as downs throughout the year, this leads to fluctuations in quarterly results that further makes up for the end of the year profit. If we take a look around at normal established businesses in our own community, we could find out that around the year the value do not fluctuate more than 10 to 15%. The actual value, intrinsic value of the business does not fluctuate. But when we take a look at stock markets, the variation from 52-week high to 52-week low can almost go to 30%, or in certain cases even more than 50%. This shows that BAAP and SAP type of investing is in full swing all of the time. Like basketball stats, BAAP takes into account every dunk and misses, but avoids enjoying the whole game. They take critical notice of every missed opportunity by the management of your business, and they punish the stock severely at every negative report that is published. When missed opportunities are punished, when a marginal loss is accommodated by the company, the stock price is demolished by BAAP investors. The BAAP traders seek out quarterly results, go in and out of a stock, making the company's market cap more volatile than it ought to be. See, volatility is good for the value investor, as most of the time it makes the company cheaper than its intrinsic value. After that, what a value investor has to do is just hold on to the company for 3 to 5 years to regain back the lost ground. When the market turns, the BAAP again steps in to convert the company into a multibagger. See, BAAP investors do not consider the price at hand. They are so immersed in the future prospects of the company. The price to earning goes up to even 3 digits. The novice investor is paying up the price to buy out the next 5 years of the earnings of the company. Now, the investor has to be always on his toes. Why? Because every setback from the company's growth path for next 5 years, that is 4 quarters in 1 year, 4 times 20, 4 times 5 is 20, that is 20 quarterly results. For next 20 quarterly results, your company has no room to experiment or take a setback and come back stronger. Any missed judgment on the human side, the human error, will turn this BAAP into SAP, hence creating excess volatility in the market cap of your company. So let's take contrarian approach to understand BAAP better. What is value investing? Buying only when you are seeing a value in the product, getting more value out of the price that you are paying. This is what we call margin of safety. How is earning multiple calculated when you're buying value? It is calculated by taking into account the comfortable treasury yield, that is the no risk return that our economy is providing. Then noting down what one can pay up for the rising enterprise is how an earnings multiple is calculated. It is based upon your risk tolerance. Long-term approach is synonymous with value investors, as buying is done when the SAAP is at full swing. Sell at any price, and enterprise is at sale from cost price, that is intrinsic value. The more bearish the market, the more is the margin of safety scored by the value investor. See, margin of safety has two core advantages for the value investor. First is it leaves room for error if calculation somehow goes wrong for the company and everything fails. How? See, as the company is still saleable in the next upcycle, you will get your money back. Plus, however much time you are holding the company, you will get dividends. Like what Mr. Charlie Munger used to say, that in one of his stories, what should I do when my horse is acting weird? The animal doctor replied, next time when the horse is acting properly, sell it. So second advantage is the long-term holding period for the real value investor. For the real value investor is for the value to get discovered. With passing years, a good company growing above normal GDP levels will eventually boost up its earning, leading up to becoming more profitable and more valuable. Bonus is the mental calmness it provides. If something goes into my direction, I will make X times my investment. X times. If nothing goes as planned, I would come out of it unscathed. Let's favor the BAAP investors a bit. Okay, let's talk something in favor of BAAP strategists. They are not at fault at this stage of bull market. The markets are expanding at such a fast pace that the availability of valued opportunities at cheaper prices is way too less. See, in a bull market, most of the value investors, when I hear their stories, they say that it is very hard to find good quality buys at cheaper prices. If they are able to find 2 companies per year in 1 year, in 365 days, they are happy with it. Whereas BAAP players are trying to fill up the gap left in the market. BAAP is providing space for novice players coming in with SIP money, systematic investment plan, that is in multi-billion dollars per month in India itself, I must add. They are just finding a place for this money, this SIP money, to be parked in. Most of these BAAP investors have only 3 to 5% of their portfolio in a single stock. That means they at least have 20 best ideas. 20 best ideas is like having to attend to 20 wives. Attending to their every situation, every 3 months, in case of a problem, when there is a quarrel, every other week, like SEBI notices, NSE demands, or even government sanction on that particular sector, it becomes quite hard for a single human brain to handle. And forget about the deep research in these 20 best ideas. That is out of the question. And trying to invest, this is like trying to invest up like hugging an index, is how BAAP investors work out to be. See, BAAP and SAAP, BAAP and SAAP, provides a good opportunity to enrich our brokers, constant churning of portfolio, and the government. The quarterly selling and buying, the constant churning leads to short-term taxation, more brokerage in brokerage accounts, and even taxation in life as well. When you are constantly on your toes, the life is also fast approaches. impatient behavior leading to more disaccord with the social elements. BAAP is provisioning a thrilling experience that accounts to be oxymoron to peaceful investing. That was my sense on BAAP investing. Thank you for watching. Have a nice day. Don't forget to like and subscribe.